Hello and welcome to Inderes TV. Scanfil released its Q2 report on the last week of November, and the overall picture was slightly negative, and we lowered our near-term forecasts. Now I'm here with analyst Antti Viljakainen to discuss the Q3 report. Hello Antti and welcome.
Hello and thank you.
So revenue decreased by 20%. From a good comparison level, which was, and it was also significantly below our forecasts. How would you summarize this?
There is still pretty low demand for EMS services on the market, and it's the main reason for the decline. Basically, end demand and use of these products that Scanfil actually manufactures is low, and also some customers are still decreasing their inventory levels. Q3 is also summer season in which some factories take a holiday downtime, which correspondingly reduces net sales every year compared to some other quarters, but still there is no denying that net sales was lower than we expected, and the main reason is in the demand side. Basically, slow progress in European macroeconomy and still highish interest rates are curtailing demand.
Scanfil reiterated its guidance in the report, and considering the sluggish figures in Q3, the bar for Q4 is quite high to reach the guidance then. The company itself said that Q4 will be the strongest quarter of the year. How do you expect this to be true?
Well, there is some signs that give optimism around the Q4. First, Scanfil has sold quite a nice amount of new projects in the first half, and first of these projects should be in production in Q4. It usually takes something from 6 to 18 months before new projects actually go to production. So this is one reason, and the second reason is that some customers that were basically buying nothing during these low quarters, Q1, Q2, Q3, have returned to buy at least something. So there is some recovery in demand, which should probably tell that at least this inventory correction that we have seen during the last year should be over. But well, yeah, the bar is extremely high, even to reach the guidance, and to reach upper end of the range would require all-time best quarter for Scanfil, which is very unlikely given the background from where we are coming from. But let's see. We are actually estimating a slight profit warning to come around the year end with our current estimates.
Yeah. So yeah, we touched on that. It was actually my notes, but we touched on that we are still possibly expecting another profit warning.
Yeah, we are slightly below the lower end of both net sales and EBIT ranges, but just slightly. And it also requires a good quarter to reach even our estimates.
Yeah, so
and it would be a year best quarter.
Yeah. So hopefully we'll get a strong Q4 to end the year.
Let's see.
And what's your overall view of the market? I mean, it seems last time you said the EMS business, the demand is investment driven, and many companies seem to lack the confidence to invest at the moment. So where are we with this? What's the overall feeling there?
No, well, it's pretty much the same. We have not really seen much of improvement yet, even if market rates have declined quite steeply during Q3 and in October as well, and this should eventually spur European macroeconomic development and also investment-driven demand. But basically, there is nothing tangible to be seen yet at this point. And the second is that this end of this inventory correction should also improve deliveries of EMS companies, even if end demand wouldn't improve, because it has been like curtailing demand at this point, and when inventory is in level the customers want, and then they should be actually start buying a bit more to keep the balance as it is, even if demand didn't improve. But yeah, 2025 should be a bit better year, but it most likely won't be a very good year for EMS industry because it's like relatively post-cyclical business.
Yeah, so slightly better ahead, but nothing to write home about, really.
Yeah, exactly.
And finally, the valuation and recommendation for Scanfil at the moment?
It's also pretty much the same we had during the last video. So we have accumulated recommendation with a slightly lower target price as our estimates declined during Q3 update. Scanfil is still pretty low valued by all valuation metrics we use, which means basically absolute multiples relative to peer group and DCF valuation. So I remain positive, especially in medium term scale, but in short time frame everything can happen, as there is still significant negative news flow risk, i.e. profit warning risks for the next few months, but this low valuation gives good confidence to look a bit further.
Thank you, Antti.
Thank you.
So still a risk of profit warning, but in the medium term